October 11th, 2024. We did something today that we did earlier in the week, and the market often will do that where it creates a pattern early in the week and then it creates that same pattern on Thursday or Friday. So you can see today we had a rally on the open and it pulled back to about the 50% mark on bar 42. And earlier in the week, you can see we also had a rally on the open and about a 50% pullback. See on bar 53. So obviously, the market likes to repeat itself and repeat patterns, and that's just one that I noticed today. Bar one, bull bar, a large tail on the top, but a really large bull surprise. So maybe an increased chance of this being a possible low of the day, maybe a 25% chance that it's the low of the day instead of the normal 20. However, it's a really big bar. So even at 25%, you really want to be buying with 10 to 13 points of risk. Not necessarily. So a lot of traders instead look to buy the 50% pullback during bar two. So now instead of risking 13 points, they're only risking 6 or 7 points. So they've increased their reward and lowered their risk. Obviously, the probability is a little bit lower. However, that's what a lot of traders will do. Instead of buying the close of one, they know that if we pull back to around 50%, traders are going to be willing to buy. And even if we pull back further, they're confident they're going to be able to scale in and make money, or the market will reverse up rather immediately like it did, and we'll get a rally on the open. Bar three, another inside bar. So bar two is a high one for the bulls, and bar three is also a high one for the bulls, since whenever you get inside bars, they function as high ones in trends. So some traders can buy above three for a possible swing and a possible low of the day. Not incorrect to do, but again, it's lower probability. And you just noticed that bulls bought a 50% pullback of bar one instead of buying the close. So bulls are more interested in buying pullbacks right now than they are at the highs. It's still a credible low of the day, but you do have to keep that in mind. Bar four, another follow through bar, but a doji bar. So hard to want to buy above bar four when it's a doji bar. Bears see a double top, 1-5, and they're hoping for a swing down, but not really that likely with the bull close. So most traders will not sell below four. Bar five, three straight bull bars, 3, 4, 5. Bar one is the first leg up, and 3, 4, 5 is the second leg. You could argue it's a breakout, but I think it's a little bit difficult to be buying the close of bar five. I'd probably rather wait. To me, it looked like we might rally, but we were probably going to end up hitting resistance. There's a couple of resistance areas up here and the all-time high, and you can see we blew right through the all-time high, but we obviously ended up testing back to it. The reason is the all-time high is a higher time frame magnet, and generally higher time frame magnets get tested later in the day. Bar six, consecutive bull bars, 5 and 6. However, tail four, tail 5, tail 6, and shrinking body size 5 to 6. It's still 4 straight bull bars, and there's going to be buyers below 6. However, you have to keep in mind that this is not looking like an early bull trend. It's looking more like a leg in a trading range. We haven't been below the moving average yet today, but we probably are going to get there. So still, to me, looks a little bit more like a leg in a trading range. But there's going to be buyers below 6 after 4 straight bull bars. And we haven't traded below another bar yet today, so we have a 7-bar bull micro channel. So, I don't know the exact probability of the odds of there being buyers below 6, but it's probably 80 to 90% chance that if you buy below 6, you're going to end up making money. We have an outside up bar on bar 7, so a bit of a surprise. You can see first time we've traded below a prior bar so far today, and there are buyers below and a reversal up. So good for the bulls. Odds are we're going to go at least a little bit higher. A tail on the top and a tail on the bottom indicates a doji bar in confusion, but possible that we're going to go at least a little bit higher. And then you have a bull surprise on bar 8. It breaks through all the magnets and it breaks to a new high of the day, which is good for the bulls. Increased chance that we get some sort of measured move up once you get bar 9. But the thing you have to keep in mind is how much higher are we going to go without a pullback? I don't really take these kinds of buys like 8, 9, and 10 because you're buying 30, 40 points above the moving average. Instead, when you get a really big surprise like that, you should keep in the back of your mind the 50% correction, which is around here, and that's probably a better spot to look to buy. 9, a bull bar, but a large tail on the top, so not quite as good as it could be. Still consecutive bull bars, 8, 9. We were always in long. We came into the day always in long, and that hasn't changed yet. So we're still always in long. 10, another bull bar. So 3 straight bull bars. This is a new breakout, 8, 9, 10. However, how much higher are we really going to go? We're 25, 30 points above the moving average. Are we going to sustain that all day, or are we probably going to have to pull back first? Bar 11 is an inside bar and a high 1. High 1s in general are going to lead to deeper pullbacks and then trend resumption. However, here, well, first off, usually the only place it's okay to buy a high 1 with a stop below the high 1 is in the spike phase of a trend. We are obviously in the spike phase of the bull trend with bars 8, 9, and 10. However, the thing you have to keep in mind is that we're way too far above the moving average to be buying this high 1 with a stop below 11. It's also a bear bar, and most high 1s, like I mentioned, lead to deeper pullbacks and then trend resumption. So I do think we're probably going to pull back below at least the bar 10 high. Sorry, bar 11 high. 12, we rallied, but probably just a scalp for anyone looking to buy above the high 1 bar 11. Like I said, it probably should lead to a deeper correction. Nothing to sell yet, but you have to be thinking a bear who sells above bar 11 and scales in 5, 10 points higher is going to be able to make money. 13, a inside bar. It's another high 1. So we had a high 1 bar 11 and then a breakout to new high on 12 and then an inside bar high 1 13. But again, you don't want to be buying a high 1 2 bars after another high 1. It's really not all that great. So you're probably buying pretty high in the range. What is true is that if you buy the close of 13 and you put a stop below 1 and you're willing to scale in around the 50% pullback, you're going to make money. It's extremely, extremely likely. But then again, you have to ask yourself when you're sitting there right here, how confident are you going to be in your read at this time in the day where you bought this close and your stop is down here and you're sitting there about to get filled on your 50% pullback? How confident are you in it at this point, right? How confident are you sitting through all of these bars? Pretty hard to do unless you're an algorithm. So that's why a lot of traders don't make that decision. 15, a bear bar closing near its low. Good for the bears. I think bulls can exit below 15. You certainly don't have to. You can rely on the second leg from 1 to 13. The reality is 1 through 13 is really, really quite strong and pretty exceptional. It's going to get a second leg up. So you do have to keep that in mind. 16 consecutive bear bars, but a big tail on the top and a big tail on the bottom. So really not as good as it could be. We're probably going to get sellers if we rally above 16. However, there's probably going to be buyers around the moving average if we get there. So I'm expecting a trading range. 17, another bear bar, but tails on 16 and 17. So it's not moving down in a very sure way. 14, 15, 16, and 17 are all bear closes, which makes me think that if we do rally above pretty much anything, there's going to be sellers, and we're probably going to end up getting a second leg sideways to down. So I'm expecting a lower high from 14 through 17 because 4 straight bear closes is going to get a second leg down. 18, sellers above 17. And you can see we sold off back to around the bar 17 close where traders will probably buy back shorts for a second leg up. But 18, you can see we sold off. 19, an inside bar, a high 1 buy for the bulls. But how much do you want to take this high 1? You could argue it's a high 2 since 13 was the high 1. But how interested are you in buying here? Probably not very. Again, if you're doing this, you need a really wide stop. The reality is we went up really far, really fast, right? When you go up, 40, 50 points in 12 to 15 bars, the market's going to have to go sideways for a little while. We're not just going to rally straight up after a 5-bar correction. You're going to need 20, 30 bars to go sideways before we're going to get a second leg. So 20, a bull bar, put a large tail on the top. Any of the bulls who were buying ended up scalping out. 21, an inside bar. For the bears, they want a lower high major trend reversal, but it's a doji bar. So no one is really all that interested in selling below 21. 22, a big bear bar closing near its low, but your risk is large and your reward is really limited. I don't think we're going to do much until we get at least a bear close or consecutive bear closes below the moving average. So I'm really not willing to sell below 22 after 18, 19, and 20. And then you can see, sure enough, disappointing follow through 23 because a lot of traders not willing to sell 22 after the doji bar on 21 for your signal bar. And you're selling low in a probable trading range, right? The 12 high and the 17 low are the current, boundaries of the trading range. So you're selling kind of the middle of a trading range, and you really don't want to do that, especially with a big bar, big risk, and the downside is going to be limited. We're not going to collapse, right? That's the thing you have to keep in mind. 1 through 12 is so strong on any other chart that's such a large bull surprise that it's really unlikely that we're going to get a major trend reversal today. 24, an inside bar, a bull bar, probably sellers above, scaling in higher, but um, you could argue that 22 is a second leg down, and that we're going to just end up getting maybe one more leg down and then trend resumption. But really, it's sideways. When the market goes sideways for this long, you look for resumption or reversal around bar 42. 25, another bull bar, good for the bulls, but it just looks like a two-legged correction. So you could argue that 14 through 17 is the first leg down. Then 18 to 20 is one leg up, pull back 22, and then second leg up 23, 24, 25. So two legs sideways to up. Probably going to try and get another reversal for at least a second leg back down. 26, an inside bar, a high one buy, but I don't want to buy a high one that's a doji bar in the middle of a trading range. So probably sellers above, scaling in higher. 27, disappointing follow through. It's becoming a triangle, as we can obviously see. Buyers below 27 during 28 for at least one more leg up. You can see 14 through 17 is the first leg down, and then we got three pushes up, 18 through 20, 24, 25, 23, 24, 25, and then we got one last push up, 29, 30. So it's three legs up in a trading range, and then we got a reversal down. So it was really just a pullback. Those whole three pushes up became a pullback. Then we got a delayed second leg down from 15 through 17. So 29, a bull bar, an inside bar. Theoretically, you could buy above 29 and take a chance we don't touch the moving average and we just get another leg up and this turns into a big bull trend. However, hard to want to do that when your risk is going to be really small, but your rewards, your probability is going to be low. So it's better to wait to start to see it happen. 30 consecutive bull bars, 29, 30. Good for the bulls, but look where we are. We didn't break out of anything. We're right at the top of the possible trading range. So there's probably sellers in this area. You have to wait and see if 31 is more good follow through. You want to see 3 or 4 good looking bull bars to be convinced we're going higher, and we're not getting that just yet. And then sure enough, 31 trades below 30. There's going to be buyers below consecutive bull bars, but the context is going lower. So that's why when we pull back from 30, the bulls scalp out in the upper third of bar 30, and that's what causes bar 32. 33 consecutive bear bars. I would not sell the close of 33 simply because I'm not selling the first close below the moving average in 33 bars. It is consecutive bear bars, 32, 33. Yes, so we're probably going at least a little bit lower. But again, I'm not selling the first close below the moving average in over 30 bars. What I would do is sell if we got one more bear bar. So if we get a bear close on 34, you can sell because now it's consecutive bear bars closing below the moving average, and one of them has their full body closing below the moving average. So that shows strength. What you're scared of here is 20 gap bar bulls buying aggressively and getting a bounce. But if you can get consecutive bear bars closing below the moving average, odds are you're going to get a second leg down, potentially some kind of measured move. So 34 consecutive bear bars. Pale 34, yes, but I think getting consecutive bear closes closing near their low below the moving average is really what's important here. It increases the chances that we're going to get at least another leg sideways to down. However, we might pull back a little bit first because obviously the rally was so big. 35, another bear bar, but a big tail on the bottom. Probably buyers not too far below, probably sellers not too far above. 36, so another bear bar, but a large tail. Probably going to get a second leg down from obviously 6 straight bear closes, but I'm not sure how much further down we're going. Sellers above 36 during 37. I thought we might try and get back to the bar 7 high because this is an open gap and doesn't seem like a bull trend day. It seemed like it was becoming a trading range day. So I thought we might try and touch the 7 high. However, we never got there, and that increased the chances of some sort of bull leg later in the day. 38, a bear bar, closing reasonably near its low. Again, no reason to buy. This is a really tight channel down. 39, another bear bar. So again, really tight channel down. We're probably going at least a little lower. 40, another bear bar, but we're getting tails. So increased chance that this is not going to last. However, it is a pretty strong leg down. 41 trades above 40. Obviously, sellers above 40. A second reversal up. 1, pullback, 2, pullback. So 42 ends up being a third reversal attempt up for the bulls. 42 is an interesting bar because it was a rally at the 50% pullback. It shows the bulls wanted to buy. They just wanted to buy a deep pullback. This channel, though, from 31 to 41 is really tight. And what that means to me is that while we did get a really impressive bar on 42, and while we are going to go higher, we're not necessarily going straight up. So instead of buying the close of 42, which you can do, you can just buy the close of 42, take a chance we get to the high. You can do that, but a lot of traders, 42, big bar, big risk, after a tight channel down, they'll be more interested in buying the 50% pullback because they know that this is going to get a second leg down. And as strong as 42 is, it does not overrule all of this selling. 43, a bear bar, but a tail on the bottom, not really worth selling. Some bears would hope that 42 is a bull trap and that they can sell below 43 for a swing, but it's most likely a minor reversal and not really going anywhere. And even if we get below the bar 43 or the bar 42 low, there will be buyers. 44, probably buyers below 43, willing to scale in lower. So, while again, we are pulling back a little bit, I think, furthest down we're going is the 42 low, and there's going to be buyers below the 42 low. There's going to be buyers at the bar 7 high. There's going to be buyers around the bar 41 close. So it's really not all that great to be selling in this area. 45, 3 straight bear closes, but big tails, 43, 44, and 45. So really, again, we're probably not going that much lower. 46, another bear bar. For me personally, after 4 straight bear bars, if I bought above 42, I'd be pretty disappointed. I know you are probably going to go sideways, but 4 bear bars is usually more than you'd like to see. However, we ended up getting the reversal up anyways, but usually I think 4 is a lot. You don't usually want to see quite that many. 47, a bull bar closing reasonably near its high, but right at the moving average. So it's also important, by the way, that 42 closed above the moving average. That increased the chances that we were going higher. 47, if you didn't want to buy above 42 because you knew a pullback was likely and you'd rather wait for a bull bar closing near its high, 47 or 50 are your chances to do so. 48, consecutive bull bars rallying back to around the bar 42 close. The bulls who bought and bar 42 close, some of them will be exiting here, disappointed at how many bear bars we got with 43 through 46. 49, a bear bar closing near its low. It's a double top, 43 and 49, and it's a low too short from the sell-off down to the bar, down to bar 41. However, after 42, I am not willing to sell a low too short. There's way too many bull bars, and look at the strength at the beginning of the day. And now we got a bar like bar 42. We're not going lower, we're going higher. 50, a bull bar closing near its high. It's a trap for the bears who sold the low too short, so we're probably going at least a little bit higher. Reasonable to buy above 50 or add to your longs above 50. 51, consecutive bull bars, so we're probably going at least a little bit higher. On any given day, there's a 90% chance that we break out above the high of the 18 bar range or break out below the low of the 18 bar range. And we have yet to do either, and here is the high. So I think the odds favor us getting back this high, and you could have bought above 42 or the 50% pullback with that premise. 51, consecutive bull bars, 50, 51. Odds are we're going at least a little bit higher. 52, a doji bar. So consecutive bull bars, 50, 51, but disappointing follow through. The sell climax high around the bar 30 high, but really the bar 32 high is a possible resistance area. 53, another bull bar, 4 straight non-bear closes. So you have to expect there's going to be buyers below 53 and a reasonably tight channel up. It is a possible wedge, 37, 43, and 50, 52. It's also, it's possible that it was spike 50, 42, and then pull back, and then a wedge channel 48, 51, 53, or something like that. The third push ended up being 55 through 57. I thought it was a possible breakout above a wedge. So kind of different ways to look at it. 54, so buyers below 53, reasonably expected. 55, a bull bar closing near its high. You can buy above 55, taking a chance. Like I said, it looks kind of like a wedge, and you can take a chance for breaking out above it, and we're going to rally to the bar 12 high. Oftentimes what the market will do is before it goes to an obvious magnet, they'll trap traders out. So that's basically what happened with the sell-off from bar. This is basically just trapping out the bulls who bought for any reason, because in general, you can use higher lows as stops. So let's say you buy above 42 and this pulls back. Your breakout point is now the 43 high. So you buy the close of 42 and your stop's below 42. Then you get a reversal down. So when we're in here, you realize this is the breakout point. So once we get 51 and we rally above it, you can now pull your stop below that low. So then we rally and then we pull back again, 54. Okay, so where can my stop go now? And this is a minor higher low. You could pull your stop below 50 after 51 since it's a higher low here. And then we went to a new high and closed at a new high. And then we went to a new high again, pulled back, and then we went to a new high, closed at a new high. So it's a logical stop below 54, and a lot of traders have their stop there, which is why before the market goes to an obvious magnet, sometimes it goes down and traps traders out and then reverses up into that area. So 54, so 55, a bull bar, possible breakout above the wedge and looking for a vacuum test of that bar 12 high. 56, consecutive bull bars, breakout above the bar 53 high, closing above. We're probably going at least a little bit higher. 57, 3 straight bull bars, tail on the top, but reasonable to buy the close, taking a chance we get to the new high. 58, I think a bit disappointing that there's a large tail on the top, but still 4 straight bull bars possible. We're going at least a little bit higher. 59, an inside bar, a bear bar. A lot of traders might exit below. So bulls can exit below 59. It's a small bar at the top of a trading range. So I think that would be the argument for exiting below it. I think it's a reasonable thing to do. And again, sometimes it just traps traders out. 60 consecutive bear bars. So a lot of traders will exit after consecutive bear bars closing near their lows. So a lot of bulls look to exit below 60. Never quite triggers. You can see we initially got buyers below on 61. So 62 looks like a second leg down when 61 is a low one short. 63. So 62 trades down, traps traders out. There's more buyers in this area than sellers. So you can see we got a huge tail. 63, a bull bar closing near its high. Reasonable to buy, taking a chance that this was a trap. And now we're getting a bull bar closing near its high. So maybe we're going to start the rally to the new high now. 64, follow through bar, but a large tail. Still, reasonable enough chance that we're going at least a little bit higher. 65, an inside bar. It's a high one for the bulls. It's okay to take the buy. Okay to be long. 66, another bull bar. Probably sellers not too far above, probably buyers not too far below. But I think we're getting to the new high before anything. We're trying to get a breakout above the wedge, or it could be a bigger wedge. 1, 2, 3. 67, a doji bar. Probably, like I said, getting towards the end of the buy the close when you get a doji bar, but we should get a new high first. You can see 68 breaks to the new high. An inside bar, high 169, but not really looking like a new breakout to me. It's not strong enough. So we tried to break out strongly above the 12 high and failed. So not really worth being long. 70, disappointing doji bar. Probably shouldn't be pulling back here. If we're going to get a good looking by the close finish, and then we just started to go sideways, and eventually the bulls gave up. And that's probably what caused 78 when we got a deeper pullback to the moving average. For stop orders today, you could have bought, theoretically above 3, you could have bought above 6. 8, 9, 10 is probably by the close, but you're going to sit through a deep pullback. I wouldn't do anything else until you could sell the close of 34, 35. You buy above 42 and just hold. You buy above 47, 48, 50, 51, 55, 56, 57. But getting high in the range, you want a breakout to the upside, and you don't get it. You buy above 6 and 3, like I mentioned. You buy above 66. So the daily chart, we're breaking out to a new high, as you can see, and we have a new all-time high. So while we are probably going at least a little bit higher, again, you have to wonder how much higher are we going. Again, we're going to go to 6,000. I'm not sure when, but we are going to go to 6,000, and I'd be really surprised if we were done with 5,000. This was not, and I've said this a gazillion times, and I'm going to keep saying it, this is not an adequate enough test of 5,000. It's not. Look at 4,000. Look how many weeks we spent oscillating around 4,000. And look at 5,000. We went through it, pulled back, touched it once, and now we're rallying away from it. I'd be really, really stunned if the stock market was done with 5,000 forever. I do think we're going back to this price. I don't know when, maybe, probably not this year, maybe next year. But I know that from 6,000 to 5,000 is, 16% correction, and that's a pretty reasonably deep correction. We might even get to 20%. So again, it's not like it's worth selling anything and taking a chance, but this was pretty strong. This was pretty strong. Just think about bull trends in general. How often do you see this? Not all that often. You can see this led to a couple legs sideways to down, and then we got a large bull surprise. We got a bull surprise here, but this was big. This was big. This is a big week. This is less relevant, but it's 1 week. But so still, you have to keep in mind it's possible we're not quite done with those prices yet. But that is the close of the week, and it is a bull bar closing near its high. So it's a buy signal bar on the weekly chart. The monthly chart, you can see we triggered. It's interesting to see if we get shrinking bars. So if this next month has a smaller body and just a smaller bar in general than the prior month, that would show momentum starting to slow. But until it does clearly start to slow, it's buy the close bull trend, since it is the monthly chart of the S&P, and that always goes higher over time. All right, that's the